Hi, everybody. Everyone doing okay? Okay, so here we go. Let's have a good week. Let me just put the chat up here. Shahab, Sinatra, Brock, how are you? How's everyone doing? No questions yet. I'm still alive, Zig. Okay, so a couple of things that I'm looking at is really where it's already starting to happen in Euro. Euro's grinding out a low. I thought this might extend into tomorrow. May try and come out of here today because the S&Ps are turning as well. So I was looking for turnaround Tuesday. I'm still sitting on my hands. Here's a couple of things that I'll be looking for. I'll be looking for a third drive up here in the end. It may not happen because, now it looks like the S&Ps are really starting to come back. Maybe they pass the legislation. But what's interesting is
I'm sorry, Dale. I just wanted to chime in. The Fed actually will do open-ended Treasury MBS buying and amount
that's it.
needed. So they're extending an extensive new program this morning,
Okay.
and that's why stocks are just ripping right now.
Yeah. Okay. Thank you, Blake.
Yep.
All
Go
right.
ahead.
So I was thinking that we might have one more break, and we'll see what happens here, what kind of follow through we get. Actually, it's almost builds a case if we rally a bit here and then come back down to this line. So we've had a few hits on this line. Last week saw this. It was a big scalp. I thought it was going to be a third drive, but you never know. You probe and protect. It was still a good scalp. We were here limit down last night, so this is trying to turn it. But you know what? It's actually builds the case because now if we get one more failure here, and that could happen if Congress doesn't get their act together. In fact, I remember, and Blake probably remembers too, and Steve, all the guys in 2008, actually what happened was the TARP didn't pass the first time, and the market really sold off aggressively. And then when TARP passed, that was the bottom at 666. I know you guys want to get a cult on that number, but that was it. So sometimes history rhymes. If we rally from here, I'm going to have chances to finesse it. But what was interesting is last night when S&Ps were making new lows, the WTI did not. Right. So what led on the way down? Good answer. It was crude. Crude led on the way down. Maybe it's going to lead on the way up. I thought we might have a 3 here as well, and it could still happen. It's early. The only way to overcome something like this is to have a piece on, but be ready just in case that happens. And I had this line comes in crude around $18 or a little bit underneath it. So we'll see if today was a day or tomorrow's a day, but definitely a nice little wick that's developing here on the S&Ps. And now the yen is selling off and the euro's turning. So I think you're going to have some counter trend stuff happening. It's the question was maybe it was from 10 minutes ago. I was waiting for a turnaround Tuesday, so maybe I'm going to miss everything. If that's the case, so be it. But the other thing to mention is that silver did not make a new low last night either. So you have a lot of things where S&P's made new lows, and it's been pretty binary. And then I'm going to let Blake in because I know he wants to trade. But you have to admit, everything went down together. Everything was going up together. Everything's going down together. Now I think everything's going to correct together. Any questions? Okay. Forex is sheltering. They're locked down in Greece. Who knows when it's going to happen here in the U.S.? I hope
We're not
everyone's
exactly locked down, to be honest.
You're not really.
No, you just have to print a paper and sign
Okay.
it
Yeah.
on your own that
Right.
says that you just want to go out to have some exercise,
Oh,
or
okay.
go out to help somebody else, or go out to take groceries. So in
Almost.
essence, you
Yeah.
sign for yourself that you have a
God,
valid reason to go out.
it's not like
That's
that
it.
in Italy, though. I mean, do those people sign for
Yeah,
themselves?
but I doubt it. But to be fair,
Yeah.
we for the
You
time
only
being
had.
we have 15 people dead.
Okay. I
So
knew I should have moved to Greece. Now
there
I
is no
can't come.
comparison.
I can't. We can't leave the country. So we're
Uh,
going to have to cancel the party we were going to have in Athens until they lift the ban on foreign travel. But I think that's an essential thing to do, to have a party. So just to keep our spirits up. Anyway, so there's your update from Europe on what's happening with Corona. Good luck to everyone today. Maybe I missed everything. It won't be the last time. But those are my thoughts. We'll see if they play out, or I was just slow on the trigger. Someone I know who's not really slow on the trigger is Blake. So Blake, you think we're getting these turns here right now on that announcement by the Fed?
I'm hesitant to believe that. So
Like euro and
I think that we are rallying. I don't know if that is going to be sustainable. Do you see my charts?
Got him, buddy.
yeah, we do.
Yeah. So we got the S&P, and one of the things that
oh, back to previous low. Nice look.
Yeah, we are at the previous low.
Yeah.
So you got to be really careful about being long, SPOOs here. If you were, if you use ForexAnalytix, last night, you got the analysis that, the SPX is limit down following the open. And so unless buying comes in overnight, we're at the lower end of the 4-hour channel, maybe tested tomorrow at the 2140 level. And we didn't, we held limit down. So now we're bouncing, but we're at that previous support. It should act as current resistance, and it is. And you look at a 15-minute chart. I mean, or I can just go to a 5-minute chart because it's kind of what you got to do. We're knocking our head up against that previous support here. So would I be on the long side right now? This is one of the things that scares me the most about everything that we're seeing is that the Fed, everybody is just throwing everything at the markets right now, and it's had
1 trillion here, 1 trillion there, 2 trillion.
1 trillion. Yeah. I mean,
soon enough we're going to be talking about real money, right?
Right. I mean, and Dale, speaks from history, and he talked about TARP, and that ultimately created the bottom. I don't know if this package that was supposed to be voted on today, this morning, but I think it's getting pushed back to this afternoon. I don't know if that's going to create a bottom in the markets.
Forex Gal is asking, what did you say the Fed is doing? In essence, what the Fed said is that they
Fed,
now have an open commitment to buy both treasuries and mortgage-backed securities in an unlimited amount for an unlimited period of time. So in essence, what we were laughing about in the past, QE infinity, is now official. That's what they announced.
Yeah. Like, we will buy as much as we need to buy. And you know what? You know who the beneficiary is here, Steve?
Hedge fund guys.
Yeah.
You guys cannot forget is gold and silver. These are the asset classes. Those are the asset classes that you got to think, man, with all this unlimited buying of everything. There goes gold. Just hit a trigger I was looking for. This is going to benefit these precious metals, and you're going to see people run towards the hard assets. So I think gold and silver are going to be the big beneficiaries here. Gold has been under a lot of pressure as of late because there's been a lot of like forced liquidations of things. You know, you have funds that are just getting absolutely creamed. Being long equities, they also have long gold exposure, you know, so they have to, you know, exit those. And so I think there's been a lot of long liquidation in, you know, some of these asset classes. So now we're starting to see, you know, these you know, the gold, silver, you know, some of these assets are starting to turn higher. And I believe that's going to continue with the actions that not only the Fed's taken, but also, you know, you think about what, you know, is going to be done by the Treasury Secretary and, you know, hopefully Congress, and they're gonna give some relief, and they're gonna borrow trillions of dollars and flood the market. So I don't know if inflation is ever going to become an issue. It could, but, you know, you're going to see a flight to these, you know, these hard assets. So I think you got to be looking at, you know, gold, possibly even silver as well. You know, and are these actions going to,
Sorry to interrupt. They're not
No.
even borrowing. They're just minting trillion-dollar coins. So they're not even increasing their debt. So this is pure inflation now. But anyway,
but you're right, Stelios. I mean,
and just going back to the extremely basics, we used to have, you know, thousands of years ago, a bartering economy. People, you know, you had a chicken, you exchange a chicken for something else. We created currency and money to make the ability to transact much easier. That's what money was supposed to be doing. So now, without increasing the amount of goods available to buy, we're saying that you're going to have unlimited currency to buy it with. I mean, if this isn't inflationary, I really have no idea what is.
Did you say if this isn't deflationary?
No, I said inflationary.
Oh yeah, inflationary. All right.
Yeah.
Exactly. And so for that reason, guys, you have to be thinking, man, you know, gold and silver are going to be, what else could we be buyers of? I mean, you know, you see
land.
Huh?
Land. I'm not kidding. Land.
Land
is something. Land.
Oh,
yeah.
land.
Yeah.
No, lambs.
I thought
euros.
you said lamb. I'm like, dude,
no.
You
land,
know, I don't.
land.
I'm not. I would love to have a euro right now, but you know.
Yeah.
You know, by extension, when we get inflation, you get stocks going up. So
Yeah,
of course,
everything.
but in nominal prices.
Yeah,
in
in
nominal
nominal
prices, not in
prices.
real prices. Yes.
So I think perversely, as they're doing this, you need to be getting slowly long stocks, because this is going to be the next big move whenever it happens.
And
The
short
question
the
is-
dollar
the
is
question-
part of the nominal gain.
Oh yeah,
Yeah.
absolutely.
Yes.
In essence, what they're trying to do now is sacrifice the dollar to keep asset valuations, you know, nominally at a high level.
That
That's what they're
happened in
trying to do now.
2008. If you go back, we had a 30% drop in the dollar and a 30% appreciation of S&Ps.
Yeah, and I
the
think
bottom.
the same thing is going to happen here. And by the way, I'm not saying it now. I just remember, you know, coincidentally, I had an open conversation on Twitter with some people, including our friend Ures, and a couple of months ago or 3 months ago, something like that. And you know, I told him that I'm very bearish at dollar, and he said, "Okay, so what does bearish mean?" And I said, "I believe that dollar is going to lose 30% of its value in the years ahead, probably sooner rather than later." So, in essence, it's exactly what you're saying, Dale.
Yeah. Okay.
So, overnight, I sold a little euro last night at. If you guys watched the week ahead video, I said, you know, as long as we stay below this 107.70 level, I sold some euro last night at 107.60, and when I got up this morning, we were trading at 70. We were trading down here at 106.70. Right here is when I got up, and I closed it because I'm like, you know, wow, I woke up with almost 100 pip gain. I'm like, I'm going to take that off the table real quick, because in this environment you have to. But the reason why I'm trying to point that out is because on the week ahead video, I was signaling how important this resistance or, you know, previous support level is. It's very important because if you are trading the euro, a break above, I guess it'd be 108.25, somewhere around there, would be very bullish. But I would be very careful about getting too bullish the euro down here. If you got long this morning because you were, you know, bottom picking, taking some, you were like, okay, this is, I have limited risk by being long down here. If that was the case and you got long, which I didn't, and I'm going to tell you, I was short, covered, and I've just been kind of sitting sideline ever since then. If you're long right now, you have to be a little careful as we're approaching this 107, 50, 60 level. I'm not brave enough because of what the Fed is doing. I'm not brave enough to step in front of it right now and look to short. Although if there was no action of the Fed this morning, I would be shorting here or close to here anyway. So just be careful. This is going to be a really tricky area. This blue, you can see I've got it in blue, and I'll just keep it there. This is going to be a really, really tricky place for the currency market, in my view. Okay, so just if you're dealing with the euro, the cable came off the lows as well, which sorry guys, I was sleeping until like 5 o'clock in the morning over the weekend. It was great. It was like marvelous, but the cable is actually finding a little bit of support down here. Remember, we are at 127% extension. A big 127% extension of this move, which I'm a little hesitant about shorting the cable down here, even though, as I mentioned in the week ahead video, I think there is risk that we could come down to 110 if the dollar comes back into demand, but I don't want to be on the short side here, not at these levels. If we got back to 120, I could be short. I could see myself being short, but just be careful there. The Aussie and the Kiwi also finding a little bit of support this morning. I haven't updated these charts from last week. I was kind of looking at it like this, but let's remove these. I am very much in the camp that if the Aussie dollar ever gets above 60 again, which I'm assuming at some point, wow, look at equities just ripping. You're going to get your turnaround Tuesday, Dale.
Yeah, what, sell it?
No, you're going to get it on Tuesday, not today.
We had it today.
Short.
Turnaround Tuesday was on Monday.
We're going to do turnaround Tuesday on Tuesday, like it's supposed to happen. I think what you're going to get is you're going to get an S&P sell around 2450. If I had to guess,
I see that line there. Yeah.
Yeah, that's how I'd play it, and I'm not
really. If this ramp up fails, Blake, I don't know what they're going to do, because I don't think there is anything they haven't thrown at the market now, especially, after today, that they in essence announced that, an unlimited, without an expiration date, facility to buy everything. I don't know what else there is left for them to do.
Right.
Turnaround Tuesday came early. It was last night and today. It's the way it looks to me. Blake, what would you say if we got over that 2450 level?
We'd have to get above 2500.
Okay, and then what would you say over 25?
Oh, over 2,500, we're going back to like 2,800. So this is the reason why I say that is the highs from last week.
Yeah.
This is the underside of the big broken trend line. So we would a move above 2,500, we'd see 2,800.
Okay.
Roughly. And then you have to be a seller up here because you just have to be. But I sure as hell wouldn't want to be selling right now. You look at the S&P and this looks like we are going to make it. To 2430, we're at 2360. But man, it is violent out there.
Yeah.
Look at the Canadian. Look at how it just turned. That turned pretty aggressively. Here's the pesos turning from.
The euro was aggressive. Everything was aggressive this morning.
Yeah, this is a big 161% extension. You guys, again, if I know some people were. Talking about it in the chat room, like, hey, did you guys short any peso up here? I did not. But if you use ForexAnalytix, the US dollar Mexican peso is nearing channel resistance and the 161% extension at 2504. We came within just a few pips of that, and now we're reversing. If this stock market is going to hold, this is a good short up here. I think Chi in our chat room was talking about this being a 3 drive, Dale.
It is.
Yeah, right. And so you got opportunities, around here. If you want to short the US dollar Norwegian krona, This is probably now the spreads are so wide for this pair right now, but this could actually see 1 or 11, maybe 11 even, I guess, as an exchange rate. But yeah, some pretty big moves, guys, and I think you have to be on guard, but I don't think you should get too comfortable with whatever you're doing. And that's, I think the downfall to a lot of traders are going to be that they expect, whatever we saw on the downside, you're going to expect the opposite, going the opposite direction. And I just don't think that's going to be the case. Yeah, the S&P is bouncing right now, and yeah, it's a pretty aggressive bounce. But I think if you're thinking that the S&P is going right back to 3,000 in fairly short order, I don't think that's going to be the case. But
buy gold, and even if that happens, you will be so much in the money you won't care.
Yeah, there you go. Yeah, that's another way to think about it. So Steve, what are your thoughts about this unlimited quantitative easing? And you too, Stelios, what do you guys think?
Just during the past few days, they've created so many facilities with so many acronyms that I've lost track of them. It's more than clear. They want to sacrifice the dollar. I think that's going to be a big long-term mistake. Anyhow, it would happen, but I think it's going to be a long-term mistake to support asset prices. Do I believe they're going to be successful? I think they might be able to be successful. Now, do I think this is going to solve the problem? No, I think in the medium to long term, it's going to create a much, much bigger economic problem than the one we're currently facing that's going to last, some months. But, unfortunately, personally, I've gotten used to seeing politicians, regulators, central bankers doing their own thing because it's the easiest thing to do in the short term. They'd rather, prevent some pain today and exchange it with a lot more pain, at some point in the not so distant future. So Blake, I wouldn't consider it unlikely that this might actually end up working in supporting stocks, right? If we're talking about that.
Right. Yeah. I mean, the stock market.
Because the real problems that the complete economic shutdown that we're going through will bring, nothing of what they're doing, nothing connected to monetary policy can do anything about it.
Right. I mean, we're going to have millions of jobs lost. Probably.
Millions of jobs lost, huge disruptions to the economy, a huge distraction of capital. The economy once again is going to try to rebalance from the exact opposite state, from a state of extreme overvaluations to something more normal, and they will try to prevent it by once again supporting asset prices. And in this case, because they don't want social unrest, I believe we're also going to get a second phase, which we know that they were looking into since 2011 when they were afraid we will go in a double-dip recession, which is helicopter money as well, all of which are extremely inflationary. So as I've been saying since some time ago, I'm really afraid that, the problem here is not going to be what happens today, but, that the remedy they're trying to administer the patient is actually going to end up killing him down the road.
Yeah. Well, what's the Stelios? What do you say?
It's
a little bit more less
metaphorical,
less Debbie Downer.
we're all gonna die. No, I'm kidding. You know what?
You're right, bro.
I've been talking. Yeah, eventually we are. I've been talking about this for days. What is it now? Over 10 days, I've been saying I think 4 to 5 trillion is the number that the Fed needs to throw at this for it to make any kind of impression on the markets. And this is what they're giving us. The question, though, as always, is how do you do this? How do you put all this liquidity to the market? By buying bonds and mortgage-backed securities or whatever it is? That doesn't have the direct effect that you need, because the problem we have here is you have all these millions of people staying home, not going out, not spending, not doing anything. So theoretically, I'm not saying this is the right way to do it, but theoretically, if they want to spend a few trillion trying to solve this, they would have had to say, everybody stay at home. The government is paying your wages for the next 6 months, whatever it is. We're paying everything. And then this way, companies don't go bankrupt because they don't have, obviously they do have other costs, but the main cost, as we all know, is personnel, especially in things like hospitality and restaurants and all these sectors. So the government pays the wages of all these people for 6 months, however long you need. It's probably going to be less than 5 trillion anyway. So that's I think, in my opinion, the only way to actually try to face it. Although, to be honest, I don't think there is a way to face this. So you have to let the economy have its down leg, proper down leg, correct itself, find its balance. And then you start, like Steve said, you start from a normal valuation level, and then you start rising again. You just cannot eliminate recessions completely. You just can't. So
and it's not by accident that, theoretically speaking, they're trying to persuade us that once in a lifetime financial crises have now coincidentally started happening every 10 years. It's not a coincidence. It's it's what happens when you try to mess around with forces of nature. And Stelio, by the way, what you proposed, I think Ackman proposed something equivalent, but for 1 month, which for 1 month makes no sense, because what makes you think, what makes him think that if everybody stays in for 1 month, coronavirus disappears? It won't. It's a very limited amount of time. But I have a question for you. So far, the whole economic model of the US, which was based on debt, unfortunately, during the past couple of decades, was based on the fact that foreigners still accept the dollar to send out real products. So question, now that everybody has the coronavirus, because coronavirus has not only affected the US, it has affected, the globe. So now that everybody has the coronavirus, where are the surplus products going to come from? Because nobody works. No country has its full workforce producing. Not China, not Germany, not South Korea. We can mention all the traditional countries that have product surpluses and export. So now that those countries will keep their traditional export items for internal use, because production will have to go down by a lot, no matter how much money you throw at it, why would they accept US dollars or any kind of currency to export real items that they will actually now need to get paper money?
No, they will not. There will be shortages of stuff.
Exactly. Yeah, that's the issue. So even the plan you talked about, which I know it's not your idea, it's one of the plans that is going around, I think wouldn't work, because there wouldn't be enough surplus products, no matter how many dollars you threw at them. If you actually said, okay, I'm going to shut down the US for 6 months and tell everybody, stay in your houses, stop going to your work, stop producing, and I'm going to take care of the bill. Needless to say that there is no money to take care of the bill, but which means, I'm going to print all the money needed to support you. But how are you going to persuade other countries to actually accept that money to send you actual products?
I'm talking about industries that don't actually need outside products, like like I said before, restaurants and hotels and anything else that is like transport and stuff like that.
Anything that needs imported products, that's going to be a huge problem.
You're going to have shortages for sure. Anyway, there is no solution. That's how I feel, unfortunately. And you have to
just a real quick heads up, the euro dollar just hit the 127% extension of this move lower last night. In the event that we get up to this is where I'm a seller of the euro, just so you guys know, right here to 108.30, that's where I really want to be a seller. It's 161% extension. It's also, it matches the highs from late last week. I'm going to be a seller up there if we can get up there. So that's, something that I'm going to be, actually, I'm going to put an alarm on that just so in case I'm away from my desk as I go get coffee and yada, yada, yada. But that's what I'm looking for with the euro. I hope we see it, because I am going to be a seller up there or a buyer of the dollar. And Steve, I get what you're saying. I totally get what you're saying. It's not relevant to what I'm doing intraday, but I totally get what you're saying as far as your longer term bias of being bearish the dollar. So
no, and I'm with you, Blake, in the short term. I mean, until we really get an indication that the dollar has reversed lower, we might have more to go. As long as we're in a liquidity crisis, etc., there is no question about it. The dollar is going to remain bid, and just one attempt to reverse lower doesn't make a real reversal.
yeah,
So yeah, absolutely.
right. And
so we don't disagree at all.
Just remember,
different
guys,
time frames.
in this environment, you've got to really keep your eye on, these gold, silver, precious metals. I think if gold starts, you can see we're actually starting to make, we were making lower or higher lows. Now we're going to start making higher highs on an hourly basis. This is, the makings of a base that we're trying to build with precious metals. And I think if we get a nice solid move above 1550, that's gonna really create a bottom in the gold market. So just a little heads up. I think it's starting to show it's working that way. But I'm going to pass it over to you guys and folks. I hope you all just please. Well, first of all, take advantage of the ForexAnalytix offer if you haven't done so already. The volatility offer. We're going to let it expire at the end of the month. Make sure that you just take care of each other. Take care of yourselves, wash your hands, be safe, stay at home if you possibly can. I think it's so important that we did, last night we went to our neighbor's house. We sat outside in their driveway about 12 feet apart from them. And, that's what we did. We just,
Yeah, if you can still interact, you need to do that.
Well, we're not in lockdown mode. We're in kind of like we are
not yet.
We're not yet. You
think that he will lock down the country, Blake?
I don't think he will.
Yeah, he doesn't want. He doesn't want to. Even though the economy is taking a body blow, he doesn't want to contribute to it with a lockdown.
No, and you know what? Well, the thing about it too. I was just reading, and then I'm going to pass over to you guys. He's really, despite what the health care officials are saying, he really wants to get people back to work, and he may really jeopardize the health of a lot of Americans if he decides to put people back to work. Saying it's okay to go back to work in the next couple of weeks, and I'm a little scared about that, frankly. So,
okay,
but we'll see. We'll see. I think a lot of private companies will say no, thank you. We're gonna keep on lockdown, but I don't think he's going to. I think he's going to try to get people to get back to work.
I'm just not sure how long I could keep eating sardines.
That's sardines. All right, hey guys, good luck today.
I am eating them. Yeah.
You guys all have a great one. I'll see you soon. I'll see you on the.
Good luck today, Blake.
I'll see you on the daily roundup webinar here in a few hours.
Bye, Blake.
Bye, guys.
Good luck, mate.
Thank you, Blake.
You too.
I think I agree with what Blake just said, and I think that one of the one of the elements that might help in keeping companies closed is the litigative nature in the US.
Yeah. Litigious.
Yeah, the litigious nature, of the society. I mean, which private company is going to take the risk of opening up and then started getting sued by employees, customers, because they got the coronavirus. So I think that, even if they try to persuade people and companies to go back to work, most likely they're not going to go along with it because it's going to be quite dangerous.
Don't you think that companies are always also noticing if their productivity isn't severely hampered by people telecommuting, how much money they could save on overhead if everyone did this more often? No office space, right? I mean, I wouldn't
Yeah,
want to be long commercial property right now.
Oh, I'm with you. I'm with you. I'm with you. And on the opposite side of the same coin, we were discussing that with Stelios a few days ago. I think it was like Saturday. You know, there are some companies, not a lot of them, that are going to benefit massively from that. One of them, for example, is the one
Zoom.
we're currently using to communicate with all of you, right?
Yeah.
So yeah, Zoom is one of them.
Teledoc.
Yeah,
where you could see a doctor over the internet.
Yeah. All these type of companies are going to benefit hugely. That's point number one. Plus, I think that this crisis will change somewhat the nature of doing business in some sectors, because sometimes there is like difficulty in changing the way you're conducting business just because of inertia, just because you were doing something for that amount of time, keeps you doing it in the same in the same manner. But now that everybody's forced to to do everything online, online meetings, etc., and they will have to be. Yes,
we're going to get to the point where they say, now we're really going to find out whether all these meetings could really have been emails.
Exactly. In some cases, they will find out that many of the expenses that they were going through were not really needed. So I do believe that after a few months in high alert due to the coronavirus, when the problem goes away, it's not going to be exactly 100% going back to what was the standard before. I think the standards are going to change in some industries. Netflix, very good point. Netflix and this type of companies also will benefit greatly. I mean, a lot of people that didn't have the time to to subscribe because they didn't have much time to watch, they're going to try the product now, and they're going to like it, and then they're going to remain being a subscriber in the service, etc., etc. Just to give you an idea how much popular they are, I don't know if you read about that, Stelio. They postponed the launching of Disney Plus channel, I think in France, because they believe that's going to actually hamper the ability of the internet to function properly now that everybody's inside.
Yep, and Netflix streams not on full HD now, or whatever the high quality is. So yeah,
not on 4K. Yeah, not on 4K
yeah,
because they had 720p, full HD, and 4K. Yeah,
whatever it is. Yeah. So yeah. Yes, interesting times for sure, and we've said this day in, day out here. This is not over. This unfortunately is going to continue, and the economic effect is going to be big. And as we discussed before, it's very difficult for governments to actually tackle this. They can try and do their traditional methods, which are not going to be really that valuable this time around. So the only way, in my opinion, that this can actually restart is to let the economy go where it needs to go, let asset prices reprice. And
unfortunately, they won't.
Yeah.
They won't. So we have to be prepared for what happens because they won't. And what probably happens is huge depreciation of eventually huge depreciation of currencies, right, of fiat currencies, and rather a big appreciation of anything that is tangible. Anything,
because if you think about it, when all these asset prices were rising, everything, right? Not only stocks, bonds, houses, cars, rare cars, I mean, or wine, or whatever,
paintings, whatever, everything.
All these things, right? People are taking a speculative view on them, because I remember, I used to live in London for years. You buy a 2-bedroom flat in a really nice area, you pay £2 million. I mean, it's ridiculous, but that's the price is £2-3 million. So somebody who's buying up there any asset is taking a risk. He's looking at this and he's saying, right, I'm going to take a view on this asset going higher. Well, now that things are going to start to go lower, they're pouring trillions onto the market in liquidity and effectively bailing out all these people who took a gamble and it didn't work out. So theoretically, you should allow assets take their own equilibrium. But like you said, they're not going to do that. So
it's what they've said, Stelio. And by recent, I don't mean this year's, of course. I mean, the past several years, at least, and from 2000s and forward. Of course, 2008, exacerbated the issue. Recent monetary policy is, in essence, socialism for rich people, rich individuals, and high net worth companies, right? That's what it is in essence.
Yeah.
Because that's the segment that in essence they're bailing out, and that comes from me, which I'm the exact opposite of socialist, right? So I do believe in capitalism, I do believe in free markets, I do believe that maximum prosperity for all parts of society comes when you actually have free market, as the US did for many decades, and it became the most prosperous country in the world. But they've reversed course, and in many of the developed countries as well, and we're seeing slowly but certainly the effects creep up to the economies, and we're now in debt slavery, and this brings on more stupid policies, and at the end that's not going to end well. As simple as that. Anyhow, back to the charts. Now, since we were talking about real assets, keep in mind that crude, since somebody mentioned also that as well, crude has been holding the 161.8% extension of this little rebound that we had after we got that flash crash low on Sunday night a couple of weeks ago. We might see a little bit of a rebound here before we move lower, but I still think that it is a likely scenario that we might see crude trading in the teens, 15, 16, 17. Why not? I mean, I think it can actually happen, especially if they don't manage to derail the dollar yet, because the market will still be focused on the huge dangers for the financial system. So if the dollar keeps being bid, it's very easy to see another leg lower for crude, if not from here, from a little bit higher. But as I've said, I will consider anything like that, a huge buying opportunity. And the same applies to metals, and especially silver. And I say especially silver because we've shown this multiple times. The gold-silver ratio almost touched last week 130. I remind you that anything above 100 and change was historical all-time highs, right? And as you very well know, history goes back a long time having to do with gold and silver. So we have definitely seen a pullback from 120, almost 130 that we reached, but still the relevant value of silver against gold and against many assets is still ridiculously cheap. Okay, so silver, crude oil if it moves lower, natural gas, which is trading at multi-year lows. All these assets, I think, are going to produce amazing buying opportunities in the weeks, worst case scenario, months ahead. Okay, it's very hard to predict right here, right now, when exactly the time is going to be. But that's why we have technical analysis. I mean, fundamentally, that is my outlook, and having to do with technical analysis, you expect some type of a big daily reversal that's going to be followed by a big weekly reversal, and then you're going to start having solid evidence that something that you already knew that was extremely cheap and extremely undervalued is about to take off and explode higher. So, as I usually like to say and do in these cases, it's not really worth trying to catch a falling knife. It's better to lose a little bit from the reversal, because once those reverse higher, I think there's going to be a lot more upside. So it doesn't really matter if you're going to lose even the first 10% higher or even 20% higher, because some of them can really, in my opinion, triple in value within a year, a couple of years. So what if you lost 20% of the first leg higher, right? I mean, if it is to make a 200% move higher, 300% move higher, you've lost almost nothing. Still, by the way, we don't have any real data coming in today, right? Not that data is really moving the market anymore, just saying. Copper, by the way, copper came close to the 2016 low on Friday at 194 or whatever. So copper is getting, quite cheap here as well. Australian, New Zealand dollars also. I mean, they are trying to put in a reversal. They did perhaps post an exhaustion candle on Thursday, but we need more evidence to be certain about it. So far, Thursday's candle, look at it here in the Kiwi, a very, very long spinning top. So far, we've had 2 inside days on that. So what's the range of this massive candle? I think that, breaking out from the range of that candle is going to be quite important. Same here with the Aussie. In any case, I would rather have exposure to tangible stuff than fiat currencies like the Aussie and the Kiwi. So, I'd rather, for example, buy gold or silver than buy Aussie USD. Of course, they can both perform well. There's no question about it. Now, having to do with stocks and indices. Now, we've had quite a nice rebound so far from the lows of the day. We actually posted the lows of the day right on an important horizontal support resistance area. If we close like this can prove to be a nice reversal candlestick, but keep this in mind. We're still trading within a steep descending channel. Okay, so although it's not unlikely, especially after what they've announced, to see some type of a low forming here, doesn't necessarily have to be, the low, but it can be at least a short-term low. To be more certain about it, you would definitely need to see this channel breaking to the upside. And, from support resistance areas, I would have to say that 2400 is the first area to watch, 2405. We need to close above it, to see a daily close above it, and then 2490 or so. Then I think we're going to have more evidence that we're seeing like a big rebound unfolding from there, in which case we will start exploring potential upside targets to sell into. Here's the DAX as well. DAX also was still trading within a steep descending channel, currently testing resistance, but keep in mind, it did the exact same thing on Friday, and then it gave back all its gains to close almost unchanged, so, close to the lows of the day. So, let's first wait for a daily close above this channel, and we can then, feel better about talking potential upside targets. Here's the FTSE as well. I have to admit, and that's why I put a long pattern in play, and I bought myself S&P, close to the end of last week. I do see clear signs that momentum is waning to the downside. And I do think that, even within a big bear market, there will be, of course, counter trend rallies. So I'm not going to be surprised if, especially after today's events, we see this to start unfolding. But obviously, when you're trying to trade something counter trend, you need to have a very well-defined risk-reward ratio. You need to be, and I'm just reiterating things I said last week, you need to be absolutely determined to lose whatever is at stake. So, you have to go into the trade considering, the amount at stake to be lost, because only that way you will manage to, to keep your calm and trade it properly. And you will have to be quite conservative with your targets, right? I mean, if we have a counter trend rally, it's not necessarily true that it can extend, much. I mean, it might be sharp, but it might be short-lived. It might last for a couple of days. You might see the market retracing 10% within a couple of days and then completely failing and, losing 30% within the next 2 weeks. So bottom line, be conservative with your upside targets. I mean, if you're looking for a rebound from here, don't hope that you're going to see above 3,000 just because, they've announced some measures. Because I remind you, the same deal happened in 2007, 2008, 2009. I mean, once the stock market started tanking, they made several attempts to control the fall, but they were unable to do so until the stock market actually reached some levels that made sense for buyers to step in. So, you know, we might have the exact same thing happening here. So is it still very likely that we're going to see, let me show you on the weekly. Is it still likely that we're going to see the S&P in that zone? Yeah, it is. Between 1800, 2130, I think this is, you know, a decent buying zone. Ah, the chart even says so. Okay, so I think this is a decent buy zone. I think that we might see some nice buying coming through anywhere between these areas. Okay, now if we fail from that, then the next area is going to be that one. But I think, you know, we don't need to just, you know, jump ahead. So that's what I believe about stock. So let's see how we close the day to begin with. And we take it from there. So far, we remain, you know, in a very steep downtrend, in undeniably a bear market. Okay, so always keep that in mind. Now, Euro USD. The main reason why I focus here on what happens with the Euro USD is because of this descending channel. So the Euro USD is trying to stabilize after finding support once again in this descending trend line support. Keep in mind that it's currently backtesting the previous low here at 1078. So watch this as a first area of resistance, 1078. If we go through that, then the next upside area is at 1092. So, you know, I just heard something come through the data flash. I'm trying to find where it came from. Oh, here it is. Trump considers easing stay-at-home warnings to curb economic growth. So there was a friend here that just said a little while ago when we were talking about it. Let me see. Let me find it. I'm not seeing any indication from Trump that he's rushing people back to work at any moment. Our friend doubted here, so here it is. A report about 15 minutes ago from the New York Times suggests something similar, as does Trump's latest tweets. We cannot let the cure be worse than the problem itself, Mr. Trump tweeted in all capital letters shortly before midnight. At the end of the 15-day period, we will make a decision as to which way we want to go. So let's see.
So when did that 15-day period begin? Last week?
I think so, yes.
Okay.
Yes, Dale.
All right.
Manuchin, hopeful we will kill the virus within 12 weeks. Hopeful we will kill the virus within 12 weeks. Yeah. 12 weeks is going to be more than enough to, you know, to make big damage to the economy anyhow. Okay. What do you think about the agricultural sector? I think that, you know, anything that is actual product is going to go up in price, at least in dollar value. So I think, you know, within the next few months, they should be doing very well. That's what I think. Now, having to do with the dollar, by the way, speaking of the dollar, and here's the DXY. The DXY almost, I mean, came very, very, very close, made it to the 161.8% extension of this last move lower, So what I drew last week about it is that, you know, at the very least, I would expect a pullback to retest, to backtest in essence, the breakout area from here, 99.90, 100, before we move higher from there. So obviously, you know, we're seeing an attempt to pull back. You know, this area is going to be key to see what happens from there. Keep in mind that I still expect the dollar to fail and to fail miserably. So far, my main thesis is that it's going to fail after posting new highs. And by new highs, I mean a higher high than the high we had at the very, very, very beginning of 2017, because, you know, that's going to be the most messy technical event. I mean, first getting everybody bullish by posting multi-year highs and then reversing lower. So my main case scenario still remains that we will see dollar, you know, penetrating through that high before reversing lower. But of course, you know, nothing is written in stone. So if we move back below 99.90, you know, I'm going to start getting worried that we might not see that higher high. But until that happens, as Blake said, respect the fact that in the short term, buying the dip until proven otherwise makes sense. And this also goes along with expecting that perhaps the next rebound that we're going to see in stocks is going to fail. Okay. If you look at a few more currency pairs that we know are very tightly correlated to risk, for example, USD MXN, look at the USD MXN here. It is also testing a very key area. What is that area? That is the 161.8% extension of this multi-year symmetrical triangle. So that comes at 24.86. We actually overnight penetrated through that area of resistance, and we're now pulling back from there. We are as overbought as anything could be. I mean, the daily RSI is above 95. I don't know how many times you've managed to see that on a chart in your life outside of cryptocurrencies, you know, in the past. I don't remember when is the last time I've actually seen that in a legitimate currency pair. I think the last time was probably when the Turkish lira was imploding a few years back and the USD TRY had literally gone vertical. So, you know, USD MXN at some point will definitely have to give back some of these gains, and usually easy come, easy go up in such a fashion usually more or less guarantees that, you know, the pullback might also be sharp. And keep in mind that USD MXN is very nicely correlated, invertly correlated to risk assets. So a pullback from here would also point to some type of a recovery. So USD MXN, DXY are more or less pointing the same thing. Also the attempt of S&P to recover higher, and obviously the rest of the indices are showing the same thing, are pointing to a likely reversal higher for a relief rally. So you want to take that side for a short period of time. As I said, keep in mind, you're going counter trend. Counter trend doesn't mean that you can't make money, but it means that your odds of that working out are, you know, rather low. So you have to take, you know, the proper precautions and the right risk management. Okay. Now, obviously, since dollar is going to be moving lower if risk assets are moving higher, you know, you might also see a recovery here in the euro, in the pound, in the Aussie, in the Kiwi, other assets that have been, you know, extremely battered down, like USD NOK, USD CAD. Look at the daily candle in USD NOK, right? Keep in mind, USD NOK is now testing once again this 1120 area of support, also support trend line of this vertical ascending channel. So USD NOK might, you know, might definitely produce, you know, a jaw-dropping move to the downside, at least in the short term. Here is USD CAD. Friday's big reversal lower, so far an inside day, but, you know, if this thing wants to even, you know, decently correct this uptrend, I wouldn't be surprised even to see it back to 138, if not 138, 140, 141, first of all, is the first area of support. You know, after that, in essence, you know, we can go all the way down to 138. Okay, so counter trend moves might start unfolding, this week. And, you want to be in the right side of the market. You want to do it with some, low exposure to begin with until you have more evidence.
Thank you, Steve.
Thank you, Dale. Who do we have for an interview today?
I have Jake, and his
What is Jake
handle.
going to talk about?
I'm going to find out.
Hmm.
He's a crypto trader. He comments on a lot of different asset classes. So I'm interested in his handle. He's a Korean Jew.
Okay.
That's in his handle. Okay.
Okay.
That's Jake's handle. So I'm going to ask him if Kim Jong-un was at his bar mitzvah. Okay. So,
okay. Enjoy the
all
interview.
right. Okay. Jake, welcome to Face. I'm going to get you set up. Really looking forward to talking to you, my trading warrior brother. And I'm unmuting you right now. Welcome to Face, Jake.
Hey, thank you. Good morning. How you doing, Dale?
Good, good. Very nice to meet you, buddy. I appreciate you taking
likewise.
time to be with us today. I'm not sure if I prepped you, but if you want to share your screen, there's a green box on your drop-down menu that says share. And if you hover your mouse above it, you'll see it. And then a picture speaks 1,000 words. We could look at your setups here.
Okay.
You see it?
Green box. Okay.
It'll say share on it.
No. Mine's a red one. So
Really? Okay, well,
I think
try it.
I think this works.
That's
Yeah,
it.
it's working.
You're
It's
coming
coming
up,
through.
buddy.
Yeah.
All right, beautiful. So
Okay.
I had a feeling you were going to be talking about Bitcoin. Now, Bitcoin started to recover before we got this Fed announcement. But before we get to the markets, Jake, maybe we could jump into a time machine and tell me how trading entered your life and, perhaps what you were doing before it and, just a little bit about your journey from point A to where you are now, point B.
Yeah, it's been some journey. Before I knew about Bitcoin and got into trading at all, I was in operations for like corporate healthcare, and I'd done that for nearly 15 years. And kind of, strange story. The VP of my company actually started to ask me if I knew about Bitcoin, and I didn't. So I started to research it, and within a day after I started researching, I was like, I gotta buy some. And this is when it was, around $2,000. This was in 2017. I kind of explored, just became very, very interested in all of that. It was a completely different market, obviously, as it is than what it is now. And I was in the right place at the right time.
How would you explain it? The character of it has changed from 2017. It's not that long ago.
Well,
why is it different now?
I think it's kind of, it had already had its emperors wearing no clothes kind of moment.
I see. Okay.
Whereas when I entered, there were a lot of, pretty much everybody came in with a tremendous amount of optimism as far as blockchain technology and these new ICOs, initial coin offerings.
Okay, yeah.
With the potential to solve these problems that weren't even really problems to begin with. But everybody kind of visioned, this is the future. And it was a greed element. I think everybody that came in and looked at where Bitcoin was and where it had come from was kind of looking to find the next Bitcoin. And now you have all these ICOs claiming that they're going to reinvent the wheel or do something crazy. And decentralization and all of that was very appealing. But once the bear market hit and you saw both the altcoin market, which are the ICOs and other cryptocurrencies that are not Bitcoin, as well as Bitcoin, both in terrible bear markets, Bitcoin versus USD and altcoins versus Bitcoin.
You talk about the decline from 18,000 to 3.
Yes. So
Yeah,
keep in
okay.
mind during that time period when you're trading cryptocurrencies, a lot of people would there are some that only have a pairing versus BTC or versus Ethereum, for instance. Whereas, some of the bigger ones will have both. You can trade it versus USD and you can trade it versus Bitcoin. But a lot of them were solely Bitcoin pairings. So it kind of reminds me of what we're seeing in the stock market right now as far as how people are looking at the US dollar. So picture this, you have in late 2017, 2018, Bitcoin tops out around 19K and then goes into a bear market with lower highs, kind of classic crash cycle. During that time period, the altcoins are actually also and have been in a bear market versus BTC since mid 2017. So they're in essence in two bear markets at the same time. So that's why that hit was extra hard to people on the USD side, because they're losing their value versus Bitcoin and then Bitcoin's losing versus US dollar. So now we have stocks which, are losing against USD, obviously, right? They're dipping horribly, but what if the actual value of the dollar goes down at the same time?
That'll
it's like
lift,
a double
that may
whammy.
lift stocks on a nominal
You would
basis.
think it would, right?
Mm-hmm.
But how has that happened in the past?
2008, dollar declined by 30%, nominal gains in the market of 30% from the 09 low. So you can't have nominal
in
gains.
09, when Obama bailed out, the USD went down and stocks went up. Is what you're saying?
Yep.
How about like in during like Reagan's era?
I don't know. I have old timers, so I can't remember that far back. You'll have to.
Yeah. Normally you would expect that. I mean, because that's how the equation works, right?
Yeah.
It's stock versus USD. If the value of the USD goes down, then the stock should go up. But I'm trying to figure out if
during the Reagan
has the opposite
years,
ever happened.
Okay. Well,
I think the USD went down during Reagan's term.
Not when the liquidator, Paul Volcker, was chairman of the Fed. Everything went down except the dollar. So short-term rates went up to 19%. That'll suck money off Mars. So that was a little different environment. What I'm interested in now, Jake, is when you talk about these altcoins, they're kind of like the junk, like tertiary stocks. And Bitcoin's had a recovery.
Right.
Will these altcoins ever recover, or are they just dust in the wind forever? And it was just a speculative bubble, and some things will, I don't know, can these coins go BK and go out of existence, these altcoins?
I think in essence, most of them definitely can. There needs to be like some sort of value being offered, and there just isn't any real use case or provable. Nobody is using decentralized applications yet. Now, will they use them in the future? I don't know. I think they may, but it may not be in the form of an ICO. It might be a company like Amazon implementing, blockchain and a decentralized atmosphere privately on their own, and not giving you a token that you can trade, for speculative value. So the actual
do you
ICOs,
think Bitcoin and crypto are a hedge against a depression or a recession? A lot of people thought it might be a safe haven, and during the recent stock market decline, it kind of went with the market. If we're in a bear market in stocks, are we also in a bear market in crypto, Bitcoin in particular?
So, yeah, I mean, because I really kind of am against that narrative. We saw that also in December of 2018 when stocks PPT plunge protection hopped in, and it was like right after Christmas, and you saw a big recovery. I mean, that was kind of right around the point where Bitcoin rallied from its lows around 3,500, made it all the way up to 14K with stocks. So a lot of the performance times that Bitcoin has done well has been good environment for risk on. And
Okay.
there haven't been very many tests in essence since 2008 of how Bitcoin will handle a risk off environment. But from what we can see in 2018, as well as now, obviously, there is no safe haven component thus far. Now, does the coronavirus and what happens during and after in the next year or so, does that change the way people look at Bitcoin versus versus USD and gold and silver? I don't know. It's going to be interesting. One of the things that you can't underestimate is that with this specific virus, there is going to be a major push for reduction in hard currency, dollars, fiat currency,
cash, because
cash.
well, there's been a war on cash, Jake, going on for a long time. And this is like, I wrote a poem about Corona. It's not accurate, but it goes like, Corona, Corona, fear that I'll own you. Born in a lab in China, spreading so I'll find you. No one is safe, not even a king, but I'll be the excuse for everything. And, this is what it could also be an excuse for, that people that use cash, the virus and bacteria, people are familiar, they'll get freaked out, they won't want to use paper. But that argument, doesn't the virus spread on your credit card and your telephone and everything else? So maybe it's just about going to a cashless system where there's even more control, and again, not about the virus but about something else, and the virus is being used as an excuse.
Yeah. I mean, we were just talking about this last night. People have their conspiracies and whatnot, and I don't have the answers on what the hell is happening. This is the craziest thing that I've ever had to experience in my life. And
you have to be over 100
early January.
Yeah, you have to be over 130 years old to have lived through this before, right?
Oh yeah, absolutely.
The pandemic of 1918.
And they didn't have TikTok and Instagram showing you what was actually happening back then. I mean, can you imagine what that would have been like? This is going to be different this go around, because it's like you could see everything kind of happening in real time. And, just like in a market, we saw the complacency in January, where it was pretty obvious this was serious. I mean, as China has, basically effectively shut down their country and put almost 1 billion people in house arrest right away. And I remember Ebola, I remember SARS, I remember H1N1, Zika, all these different BS kind of flu things that they scared the crap out of us with. In January, they weren't really hitting you over the head with the fear as far as American media. It was being kind of downplayed, but the reaction that China, their reaction right away was decisive, and it was extreme, like we have never seen before. Yet nobody including our president, wasn't taking it very serious at the time. I was glad that he shut the borders, but that wasn't enough. Now we're kind of seeing how serious America is taking it. I mean, we've never seen anything like this, where people are in their houses and we're shutting down the economy, basically. But this is unprecedented stuff.
It's a once in a
comparing
lifetime.
it to past crashes, I don't know. I don't think the behavior or the emotions of the market participants are the same as 2008 or 2001, 2018. So when you think about Bitcoin and how low can it go, we just saw it at damn near $3,000, right? In 2018. Guess what? The world wasn't fucking ending. Oh, pardon me. The world wasn't ending. I remember 2018, it was just, hey, this crypto's crashing. This sucks. People are losing money. But you didn't have to stay in your house. You didn't know, if your family members were going to be sick, if you were going to be able to go back to work for 18 months, which some people are discussing. So the level of fear and uncertainty right now is so extreme that, I mean, who knows? Who knows? You just have to look at it as bearish until it isn't.
Okay, so let's talk about something actionable. So we've had a pretty decent rally from kind of a crash low at 3,000. We've rallied 3,000 here. What's
Right.
your take, and how do you use RSI? If I looked at me looking at your chart right here, Jake, you see the RSI reading that we had at the lows. It looks
Yes.
like it was like 20 or lower,
Yeah.
15.
Yep.
I would say, based upon what I know about RSI, that it would be unusual for that to be a low because price and momentum confirmed down there. What are your thoughts?
Right. You know what? I totally forgot I even had RSI on this chart. I'm not a huge user of it, and I was
What is
enjoying
it? Decorative?
No. I mean, I use it to some extent, but it's not a main thing. I'm more of
Okay.
like price action trader.
Okay.
Combined
That's
with some
fine.
sentiment as well.
You trade.
but
You prefer to trade naked?
Yeah. For the most part.
All right.
I mean,
Well, keep your
I like
your shades
horizontal.
drawn. Keep your shades drawn, Jake. All right.
Yeah, I have
All
yeah, okay. I have different horizontal levels that I like to keep an eye on, of course, but basically looking at this, it's just I mean, we've been bearish since around 9K, when it failed at 10.5 and started to see Corona like, hey, this is going to be serious. I think this is going to affect all markets. And, you know, if stocks pull back, Bitcoin's going with it. So that was kind of when we got really bearish. And you just see like bear flags developing. This is a way larger one. The 3,600 level was hit with a lot. I mean, in crypto, people think that there's like liquidity, but compared to other markets, it's really not there. And there were a lot of exchanges failing on that day. I mean, at the same time, I heard, yeah, oh yeah, this had something to do with BitMEX. So
what
BitMEX,
they do? They just ceased trading, and you couldn't get a trade
yeah,
off.
yeah,
what happened?
yeah. You couldn't. It shut down, but then the orders filled for somebody at 3,600, and then it bounced. So like, meanwhile it bounces from 3,600. Here, let me show you this hourly. On like one of the most popular exchanges, you get 3,600 comes in and it bounces all the way to 5K, but it wasn't tradable on that main exchange. Other exchanges, you could, but the biggest, most popular
BitMEX?
one, yeah, BitMEX had a really kind of scammy shutdown throughout that.
Okay, I have a good question coming from one of our attendees. Ingmar would like to know what are your expectations for Bitcoin around the halving in May?
The halvening?
Yeah, halvening.
So I think it really depends on there are so many variables that I don't have the answer to. And
I don't know is a good answer.
Yeah. I mean, my expectation, I don't think I think in the past, obviously the halvening, it's a bullish narrative, but here's the deal. If people still aren't working, and you see the Democrats and the Republicans can't get together yet and figure out what to do about a stimulus. But if people are not working for a couple months and who knows where their money's coming from, you know, now it starts to get a little bit dicey. More and more people, if you look at the numbers, it's simple math. It's going to get worse before it gets better. So people start to get sick. You have someone in your family sick. You're sick. You're not working. You don't know how you're going to pay rent. The grocery store starts to have less food. You're getting nervous. A month down the road, your money's running out. You're starting to worry about how do you buy food. Are you going to run out and buy some speculative asset that just dumps 70%? Like, think about that. Does it make sense? I mean, I just can't see
you
it.
sound like you've been in this game longer than 3 years to make a statement like that.
Well, thank you.
You talk about.
I have a very good mentor.
Do you? Who is it?
Yeah, his name is Kazanomics, actually. So this guy, he's a polarizing figure, but he's been he's called some of the most major crazy moves in all markets. And, you know, we actually do a show together on YouTube and Twitch, and we came out and around the VIX was, I think, around 20, or I think it was approaching like 30, in that range. This was before the Monday Japanese bank hopped in and kind of saved people's butts. this was maybe about 3 weeks ago. We warned people how bad this was going to get. He's got a pretty crazy VIX chart where if this doesn't go down, I mean, things can get.
He's looking
really,
for
really
100.
scary. I mean, this is another.
What's he
time.
looking for?
It can. I mean, if you look at.
I was only looking for 30 when I was buying
it's his chart.
14.
Yeah.
All right.
Yeah. This he says this reminds him of when Buffett kind of bought in 2008, and he bought. I think VIX was right around this level. It's around 40, and it shot up to 100. So a lot of people are like, yeah, Buffett's in cash, and if he starts buying, you know, he's going to save us. You got to realize he took like a 40% loss from where he bought. He didn't catch the bottom at all, and of course he made money in the end, but a lot of people are like looking for Warren Buffett to save them here. This can get incredibly volatile. So, I mean, from the shockwave of the top,
where's he looking for the top? Over 100?
You'd have to ask him.
Oh, okay. All right. Well, you brought it up, so I
no, I know.
Okay.
Like his chart is like, if you get a full breakout, I mean, yeah, this can enter a price discovery scenario. You don't know.
Okay. All right, Jake. Well, you talk about we. Do you have a business model? Why are you on Twitter?
Why am I on Twitter? So when I like to say we a lot because so it's not just me. You know,
I thought maybe you were
me, but yeah, no, I have a trading group with my friends and we're like a partnership of about 5 guys together, and we have some members that. So when I say we, I mean like us as a group. That we're on top of this.
Do you have if you'd like to show where people could find you and watch what you do or consider becoming a member? Now would be a good time to show it. Go ahead. It's
okay. Yeah, absolutely.
Have a little, let you for you giving us some of your time. I'm going to let you have a little commercial.
My stuff.
Yeah, sure.
Okay. All right. So
we don't view anyone as competition.
Yeah, you guys
don't have
a similar thing, right?
You know what I mean?
That's right. That's right. Everybody's got to do their own thing, and you know, the bottom line is what we do is we're trading all asset classes, crypto, oil. I mean, everything. We do everything.
Everything that moves.
And we're not going to sit here. Yeah, we're not going to sit here and tell you do this, do that. It's more about like educating people so they could start to make their own decisions. So a lot of the guys came in. It's strange enough, you saw a big wave of people coming in January because you had crypto pumping, stocks were pumping. All of a sudden, all these new traders started to come into the market, and they wanted guidance. The main shift that we're starting to get from those guys is like getting them to realize. You want to protect your money. You don't want to, if the worst thing that can happen is you don't make money, that's not a bad place to be, especially in a bear market. So like a lot of them came in thinking like they're going to make money every day, no matter what. And now like a few months later, after going through some crazy price action, you're starting to see people really turn the corner. Whereas people that just kind of came in as new and just doing their thing, they're like completely wrecked, lost like 80% of their portfolio. I get messages from those type of people, and it's really sad. But anyway, if you guys are interested in what we do, you can follow me on Twitter, really, at Korean Jew Crypto.
All right. Well, let me ask you about your handle. Why did you decide to go with that handle? It's unusual.
Why? Okay, so well, I'm an unusual guy, and as a kid, so my mother is Korean. She's from South Korea, and my dad's a Brooklyn Jew, and they met at Rockefeller Center skating rink. My dad was at the restaurant. My dad was the manager, and she was a waitress. And here I come. I'm here, and we lived in Brooklyn. We moved to New Jersey, this neighborhood that wasn't very diverse. Let's put it that way.
Okay.
And truth be told, I'm an older guy. I'm in my 30s.
That's
people complain about. Well, I mean, compared to some of these kids, I don't know. A lot of these guys are like 21 years old. So
you were in this neighborhood. Were you bullied?
Yeah. I mean, yeah, of course. I couldn't win on any side. So it's kind of ironic. My mom would pack me like Korean food, like kimchi, as well as like some homemade sushi. And I'd be my classmates are, what is that garbage? Oh, that's gross. Ew. Like, and now it's like these hipsters, they love kimchi, they love sushi, it's, you can't, so bottom line was, yeah, I caught it from both sides. I didn't feel like I belonged. When people would ask me, because I'm biracial, and it wasn't as common back then, people would be like, what are you? They knew I was Asian, so they called me Chinese. But I'd always have to explain my ethnicity. And every time it would, like, my face would get red. I'm Korean and what? And Jewish. Ooh, ew. You know, like, people didn't like that. So, so fast forward 20 years, you know, now I've lived my life. Yeah, I'm glad you can laugh at it. This is very, this is very hard for me to discuss. No, I'm kidding.
No, it's great. I mean, you know what? That was great training for being a trader, because you had to learn to live with adversity. And, you know, in this business, if you can't live through adversity, you should do something else.
That's
so
it makes you stronger in the long run is what it does.
I was wondering, did you hear my opening? I was wondering if you had Kim Jong-un at your bar mitzvah.
Yeah. Oh, yeah.
No, no, he wasn't there. Did you have one? No. Did you have one?
A bar mitzvah? Yes, I did. Absolutely. Yeah,
okay.
No, I'm the real deal,
your
man.
Father. Yeah. All right. Yeah.
Well, in the Jewish, my mother actually converted.
Yeah.
She converted. Yeah, that's the only way it could have been kosher, man.
Okay.
So how do I go from being embarrassed to using this as my name and how I'm known as now was, you know, I'm getting into crypto. I needed to make a handle, and, you know, in chats, video games, all this, I never had a good name. I didn't have a go-to handle. It was never cool.
Yeah.
And I'm like, what the hell am I going to call myself? And I'm like, you know what? Korean Jew. That's what I am. Screw it. That's what I'm going to say. I just Korean Jew. Very simple. These people are going to listen. They'll be like, because you're like, oh, he's Korean and a Jew. You know, this guy he might know what he's talking about. So of course it got people's attention. People love the name.
Yeah.
And kind of the rest is history.
You know, I'll tell you what, Jake.
Like, what a weird name. I'm like, hey, that's my life, man.
Yeah, I know it's a stereotype, but I sure wouldn't want to have
strength.
Sure wouldn't want to have to negotiate with you with that DNA that you have. So anyway, Jake, really a pleasure meeting you. And people could follow you on Twitter. And you know, like it or not, you've walked on fire being interviewed by me, and you're now my trading warrior brother, you Korean Jew.
Thank you so much. No, this was a lot of fun. Appreciate you having me on. And, you know, anybody that wants to get more interested in what we do, just follow me on Twitter and you'll see.
Well, good hunting. May pips fall upon you and everyone you work with, and stay healthy, buddy. And really thank you for your time and sharing your journey with us today on Face, Jake.
Likewise. Everyone be safe and healthy out there. Prayers up.
Okay, that's a wrap. And whether it's crypto or currencies, remember, don't just count your pips, count your blessings. We'll be back with you for Turnaround Tuesday. Market giving up a lot of its gains. S&P's only up 10, so Turnaround Tuesday could still set up, and S&P's making new lows, and the yen making a new high. I think the dollar already has turned. So good hunting the rest of the day, everyone. Adios. See everyone tomorrow. Thank you again, Jake. You're welcome, Alvin, Sinatra, Stavros.
Thanks for having me.
Talk to you later. Bye-bye, Jake.